Here we have the current stock market update for GameStop Corporation, stock ticker GME. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders will be able to find this information more easily on the platform. So we have a 30-minute price chart here, and as we can see, the stock is currently unfolding in another wave higher. So this near-term high, which previously came in at 23.10, has now been broken to the top side to start this week's trading sessions. The near-term high is now posting at 23.52, so we will be changing this ultimate price high here. We have moved higher by about 42 cents. And share prices are now, completing this prior price gap that had been formed when the company last released its earnings report. So this would have come in during roughly the September 11 trading session. And as we can see here, this is a very significant price gap to the downside, and we did manage to completely fill that gap, which was, there was a real question about whether or not that was going to be able to happen because enough time had passed. If you start to get past 2 weeks in these longer time periods here, a lot of those pre-existing orders start to close, and a lot of them close automatically. I mean, some of them are going to be closed manually, but there was a question about. There was a real question about whether or not this price gap would actually be filled, and here we can see that it has now been filled. So there was a fair amount of momentum here to the top side that was able to be generated by those share price movements, and it is a positive development here to see that that was actually able to come to a conclusion in that manner. So currently, what we're going to need to do here is redraw these Fibonacci analysis points because what we're looking at now is a bit of a new trend development. So we have seen this successive wave higher, and now some of these support zones have now moved up a bit from where they were previously. So specifically, what I would be looking at to the downside. If we were to see share prices start to retrace from here, you do have a confluence of support zones that's coming in right around 2190. 2190 to 22. It's a bit of a support region more than really a support level specifically. So as you can see here, there are a few different technical signals that are sort of unfolding in the same area here. So this is a positive development overall because this does suggest that you could start to see a relatively strong foothold that does start to develop, roughly between 2170 and 22. So, there are a few different aspects there that we should look at. Because all of these areas have the potential to support share price action to the downside. So specifically what I would be looking at first would be this orange zone here, which is the 38.2% Fibonacci retracement. If we do see share prices start to move lower here, you can initially look toward this yellow line here, which is the 20 period EMA, as a potential zone of support. But then if we break back inside of that exponential moving average, you would probably be looking at a bit more of a sideways consolidation period, because at that point we would be trading inside of the exponential moving average cluster, but not yet below that 200 period exponential moving average, which currently comes in right around 2180. So, you've really got a few different levels here that could support share prices to the downside at the moment. There is a lot of movement here to the top side, so we should look at the indicator reading to sort of get a sense of where we are currently. And as we can see at the moment, we're starting to move into some overbought territory, but a movement into this area is not going to be as bad as it looks because it could suggest that we start to see a bit of a pullback in share prices at that point. But if you do move into overbought territory at this point, what you're also doing is breaking the shorter term downtrend momentum line. So as we can see here, there has been some recent trend momentum that has started to develop in the negative direction. This really has been in place since the stock was trading right around this 23 level previously. We started to kind of develop a sideways trading range up here. And then as that started to develop, you did start to see some moderate, share price momentum in the downward direction. So, currently we are trading at some elevated levels here. But I would actually view a movement into overbought territory as being encouraging, and that's a little bit hard to understand, maybe because you should start to see a bit of a pullback at that point. But in my view, the reason that would be significant for bullish traders, for people with long positions, would be the fact that you would now be breaking through this short-term negative trend momentum. So, that doesn't mean that you can't get a new trend in the negative direction in the future, but what it would mean is that this current trend movement in the downward direction had then run its course, and it would no longer be influencing share prices. So that would be a good development, even though you would be trading into overbought territory at that point. To the downside, as I said, you really would need to see a break below roughly, it's sort of a region of support zones that's starting to develop here. Really wouldn't consider it to be one level. You're kind of looking at that $23 area as the first zone, as the beginning of that price zone, support zone. But then this really extends all the way down to roughly 21.75 or so. There are a few different signals here that do suggest share prices could be forming a base here. So, this is really the question going forward. I mean, I don't think that people should really expect share prices to just continue moving higher like this, because we are starting to run into overbought readings. So eventually, at some point, this is going to have to slow down. But in my view, the overall structure here remains constructive as long as you can really maintain a foothold above that 21.75 area. If you see a break below there, then I do think that the stock is at risk of greater losses, because you no longer have this sort of free bullish momentum that was being created by this price gap. So that has now run its course. We can really even stop thinking about that, because all of those orders at this point have been filled. There's no question there currently. So, the next level to the top side that I would be watching, if we are able to see share prices continue to move higher, it really is that $25 level. I would expect to see some selling pressure into that region, even just for options reasons. People that have put options are going to be looking to start selling into that area to sort of protect that area. But that area is going to start to be a magnet now to the top side. I mean, the market is going to be looking for those stop losses behind that $25 mark. So, as things currently stand, there really isn't any resistance here between $23.50 and $25. So here's the current stock market update for GameStop Corporation, stock ticker GME. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.